I'm joined by Ethan, VP of Marketing at leading insights and location data platform Placer AI. We're excited to dive into the trends that have impacted 2022, what it means for the holidays coming up, and our biggest predictions for 2023. So with that, I'll pass it over to Ethan to kick things off.
Thanks very much, Stephen. Very excited to be here. And so again, we always like to kick off with just a quick idea of where the data we're going to be talking through, or the lens that kind of we bring to the table, where it comes from. So Placer is a location data company. What that means in the simplest form is people vote with their feet. We show you how they vote across the United States to retail locations every single day. We do that by observing a panel of over 30 million devices throughout the US. Very critically, this is all anonymized aggregate data. So we are GDPR and CCPA compliant. We then analyze that data with machine learning and AI algorithms to make estimations on visits to retail locations across the country. And we show that data in a wealth of different reports within our platform on everything from true trade areas, void analysis, traffic routes, market share, and a whole lot more. If anyone is interested, we have a free version of our premium product available on our website at placer.ai. We also have a section on our website called The Square that is home to all of our free tools at placer.ai-the Square. And with that, Stephen, I think it's time to dive in.
Let's do it. So holiday expectations this coming season. I think we're entering into a very unique selling and buying environment right now, just in terms of the macroeconomic backdrop, as well as a consumer that's still excited to consume. So there's a bit of uncertainty of what we should expect coming to this holiday season. So I guess, Ethan, from your point of view, what can retailers expect this holiday season from their brick and mortar stores?
So I think there's a few things that we're looking at. We're trying to understand what is the potential for this holiday season, because as you mentioned, we know the backdrop is this lingering inflation. We're still in this recovery environment. So we're not at normal yet, but we're working our way towards that. And then what can we expect? So there's a few things that we feel really confident in it, and things that we think are a little bit more speculation, but still rooted in what we're seeing in the data. And the element that we feel pretty strong about is that we're going to see, like we saw last year, that strong October push. So we're going to see major retailers, both because they want to spread out the season, also because they want to try to get rid of some of that excess inventory that they have. It's been a really important headline within the retail space. We're going to see this push in October to try and get visits to these locations. So one great example is Target. Target just had their deal days. When you look at the Thursday through Saturday compared to the Thursday through Saturday prior, so like the most recent data we have, we're seeing that 3-day period visits up 5% on the week prior. So it's very clear that they're making this push. They're trying to get boots on the ground into these stores. And it's something we're expecting to see across the board. And we are seeing those indications already. And this is especially cool because the comparison to last year's October is tough. Last year, October was really strong for retail in terms of visits to retail locations. So if we see some of these bigger retailers, if we see malls start tracking close to, if not above, where they were a year prior, it could be a really good sign, at least from the brick and mortar perspective. Another element that we're seeing that we feel could be really fascinating to watch, and we have our suspicions, is that from a brick and mortar perspective, those holiday peaks could be strong again. So Black Friday last year obviously took a big hit because of the rise of Omicron. If we don't see that same kind of, hopefully there's no pandemic, and there's no kind of, COVID-esque impact, but should we seek a more normal environment, there is going to be a better comparison in a time where stores and retailers have a lot of stock to get rid of, which could see the return of this kind of doorbuster mentality to bring waves of people in on those major peak days, for example. And we saw it already, like Labor Day drove a big surge of visits. That these kind of big retail holidays, so to speak, still have a draw, and when utilized properly, can create a lot of buzz. And then the last thing that we're really excited about is actually mall performance. So one of the interesting things that we have been seeing quite a bit is that malls have been performing better than we expected, especially when you consider who their anchor tenants are. So apparel's been hit really hard, department stores have been hit really hard, but mall visits have actually outpaced what those kind of anchor tenants have done. And I think a big piece of it is the experience they're providing. So this shift to more food and beverage, this shift to more experiences, the nostalgia of bringing people into the mall during the holiday season. These are significant draws that could provide this holistic experience for the consumer, but could make the mall a really exciting place to be this holiday season.
Yeah, I think, Ethan, you touched on a lot of interesting points there. First, your prediction that kind of these big retail holidays are back. I mean, we kind of tranced away from Black Friday, Cyber Monday, and now you're kind of predicting a big splash, at least in the store, on some of these bigger holidays.
I'd say a relatively big splash, because I do think that we are seeing the peak of kind of Black Friday madness. My expectation would be that is behind us. But the idea that you could have a much stronger version of it this year than we saw in 21, that's where our expectation is at the moment.
It's interesting. And in terms of kind of retailers putting out promotions earlier, well, that's one thing that we've started to see already. My question then for you is, do you think that retailers are nervous coming out of Q3 with their inventory gluts? Target, Walmart reported on this. And do you think they're preparing for Q4 and making sure that they're not only selling the rest of their Q3 inventory, but making sure that they're going to be selling their full Q4 inventory, and perhaps promotions are a way of getting some of that merchandise moving earlier?
Yeah, 100%. I think the combination of excess inventory, really difficult economic or more challenging economic environment speaks to, let's get this stuff out, let's get it out, even if we have to reduce those costs. And the place to do that is in the store. And that, I think that's gonna be the prime beneficiary of this, less online, just because of the expectation of what could in theory take place in the physical retail location.
Right. That makes a lot of sense. And something our survey data just revealed, our kind of consumer holiday sentiment survey, was that almost a quarter of shoppers cited that they started shopping in September, end of September. And then by October, almost more than half of shoppers will have at least browsed or started thinking about their holiday shopping gifts, whether it be online or in the store.
Well, I think thinking about it, like I feel like I think about my holiday gifts as soon as the holidays end. I think
Yeah.
But yes, definitely a big shift.
So yeah, moving to the next slide, retail media networks, extremely buzzy topic right now. The team was just at Grocery Shop. I would say it was one of the most spoken about opportunities. So in your opinion, why are retail media networks generating so much buzz?
Yeah, so we love this topic a lot, and we've been talking about this kind of to zoom out, this idea that the store is more valuable than just a place to sell product is a really important kind of tenet that we've held for a long time. What's been really interesting is Shop Talk, Grocery Shop. Again, this was a very buzzy topic of retailers really leaning into this idea of their media networks, whether it's Albertsons, Walmart, Target, Dollar General, many others. And I think there's a couple of reasons, and then there's a couple of big impacts, right? So on the one hand, the reason for the retailer is obviously, here's this high margin kind of Amazon-esque revenue channel that we can tap into. And in many cases, with a bigger audience than we have online. So this is what we're showing in this graph is online unique visitors with data from our friends at SimilarWeb, and offline unique visitor data from Placer. And this is uniques over in the month of August. And so you see that so many of these retailers are actually outpacing their online reach with offline. And so if they can leverage that from a media perspective, there's a little ton of value. But the really interesting element here is why this could be a really exciting addition if I'm a CPG company or a product company that wants to market through one of these networks. And so when you think about, the way we try to reach audiences online, the thing that's so interesting, first of all, is things like, intent. So if I'm on Amazon.com, the idea that I'm looking to shop, I'm in that process and I can reach someone with the right message, that's really powerful. It's all the more so in the store where I'm so close to the point of sale in an environment that converts so highly. But there's also another element, which is the way we can segment those audiences. So if we think about the kind of these classic forms of segmentation, however challenged they are by new kind of rules on the ways we can interact with people online, there's different ways of thinking. So for example, let's say I want to sell like protein bars and I want to push my protein bars at CVS. I can identify the CVS locations that have the highest amount of cross shopping or cross visitation with local gyms. That's a really interesting way of understanding my audience with behavioral actions that don't require that classic, hey, here's the segment I'm looking for. I can look at Dollar Generals that operate in areas that have a average household income of X or lower and are in cities of a certain size or lower. This ability to kind of segment stores and cluster them differently creates all of these new ways for retailers to think about, or for CPG companies, excuse me, how they reach their audiences through these retailers. And so that combination, the closeness to the point of sale, the intent that comes with that visit, the ability to shape that action, plus this ability to target and kind of shape that audience structuring in a different way, creates a lot of excitement for all of the pieces of this equation.
Yeah, I mean, it's really interesting because at Coresight, we sized the retail media market at close to $80 billion, growing at over 80% year over year. However, most of what we've been seeing is a lot of on-site discussion. Ads, like traditionally, like Amazon's done, they're $31 billion advertising business, SEO ads, search ads, and endemic ads. But you talk about off-site or in-store retail media. That could be the new kind of frontier or next opportunity for CPGs to really get their product in front of the consumer, or at least get their message in front of the consumer. And how that's done, I think, is going to be interesting. Is it going to be through, let's say, the Target mobile app? Is it digital signage? Curious, from your lens, what have you been seeing? Obviously, malls, have their own ways of providing retail media experiences to brands or retailers. Where do you see some of the opportunities to actually have that point of engagement in the store?
I think it's all the way from kind of the outside the store all the way through the shopping journey. So we had a colleague tell us, Main Street in most American cities is wherever the Walmart is. So if I can put up my billboard outside the Walmart or the location nearby, that's a great way to attract a lot of eyeballs. Then when I go in the store, even think about things like shop in shops, something we think about so much with like a Target. But imagine as like a food brand, the ability to go to my local grocer when I've done that pre-segmentation, so I know it's over-indexed for a certain audience, and to have these kind of little Costco BJ-esque pop-ups where I'm giving certain types of products to certain types of audiences, and let alone digital signage, the elements near point of sale. There are so many opportunities when you think about what the store provides, how central it is to the shopping experience, what can be done there. I think there's a tremendous amount of opportunity, and what we're going to see in the next couple of years is an industry that it's in exploration mode. So we're going to tap into some things, we're going to see a lot of excitement, but then we're going to see someone try to figure out, all right, well, what's the next wave and what's the next step? I think that's where we're going to start finding more and more innovative uses.
I completely agree. And we're starting to see a lot of different companies, from data companies to loyalty companies to mobile app to digital kiosks, all kind of offering a supporting solution to this growing market, which is interesting to see. So I think it's going to be interesting to see how the partners play out, how companies continue to adopt the opportunity. Home, Lowe's, Kroger, Target, Williams Sonoma, Macy's, Nordstrom, Gap. Those are just a few names that I was recently reading that launched retail media networks. So definitely going to be paying close attention to that. So moving on to the next slide here. So we talked about the brick and mortar resurgence, the return to store. And so you're probably seeing a lot of interesting traffic numbers. In your opinion, what has kind of triggered this brick and mortar comeback?
I mean, I think now that we're in this we're firmly, hopefully at least, in this kind of post-pandemic environment, it gives us a little bit of context. And we think about where we were which was deeply still rooted, at least as an overarching narrative within this retail apocalypse narrative. Then we have the pandemic, and we have essentially the ultimate stress test for brick and mortar retail. Because if e-commerce was ever going to blow past brick and mortar and leave it firmly within the dust, this was going to be that opportunity. But one, e-commerce wasn't ready. Two, brick and mortar was super important. And what we ended up leaving this period with was a more holistic understanding of what retail should look like as part of a kind of comprehensive whole. So digital channels, unbelievably critical and important and bringing very specific values. And then physical channels doing the same. And that kind of complementary nature has been so important. But a big piece of it has allowed us to see what is it that makes the in-store experience really special. So one, this idea to have kind of large basket sizes, big shop. I'm in the store, I'm in kind of buying mode, but then I'm, I have these upsell opportunities. Think that like Costco-esque, I go in to get 7 things, I end up with 70. And that experience, the experience element of it. And I think one of the important elements here is for a long time, or at least, people who are less sophisticated like me, we thought of experiential as like basketball hoops and climbing walls. But experiential was also literally the store experience. So smelling candles at Bath and Body Works, or someone laying out kind of that fancy mat when you're buying jewelry, or someone helping you when you're trying on clothes. Like experience encompasses so much more. And I think we appreciate that in a way that we couldn't pre-pandemic, and understanding what kind of the store can provide. And then we think about what we just talked about with the retail media networks. We think about all these other values. So, curbside pickup, the ability to leverage it for fulfillment, for returns, the recognition that brick and mortar plays such an important part for the customer, but also such an important role for the retailer. That combination has driven this resurgence. And I think what we're going to start seeing is less, you hear, how often do we hear about this? Oh, we're going to split online and offline. It's not really this conversation it was just a few years ago, because we recognize that for either one of those things to succeed to its maximum, it requires both.
So I guess the experience is kind of shifting where shoppers are, it's not just like experiential retail. It's the actual sense of shopping and being part of a group and a community and going in and feeling and touching the product. So we don't need to get too carried away, with future, roller coasters in the mall. There's still the classic experience that shoppers are craving.
What I loved, and I think forgive me if I'm wrong here, but I think it was Chanel who opened up their store where like it was appointment only shopping. You're like, that is experience to the greatest degree, because even for the person who doesn't go in, you're like, that place is fancy. And if I'm Chanel, when there's the midst of a luxury wave, that's exactly what I want to be perceived as. And I think many retailers are kind of looking themselves in the mirror and saying, all right, who are we? What do we want to provide? What does that experience look like, where it's about how do the people who are working there help the customers? What are they looking to buy there? How do we produce that end-to-end experience that's going to keep them not just buying something once, but coming back many times in the future?
Well, I guess if you think about the kind of the roots going back to the department stores, it was meant to be a place of gathering, right? Where people would go to gather, people would know each other, they would know who works at the shops, and it would be kind of a community oriented where everyone comes together. It wasn't really about kind of like flashy experiences, right? But I think the stores now are starting to provide certain things that are elevating that experience as it means to link to online, which is kind of repositioning the purpose of the store,
100%. But even I'll say something that when we looked at grocery a lot, I think that was one of those spaces where, again, the 2019 narrative, let's call it, was very much everyone hates grocery shopping. Everyone finds it annoying. The second you can do it online, they are going to ditch it because convenience is king. And the answer was not quite. Yes, convenience is important. Yes, value is important. But you know what? People like walking the aisles. They like choosing their cereal. They like picking out their vegetables. It's not just rational, it's emotional. And I think that is what I think retailers are starting to realize, that, or not starting to, have always known, but are emphasizing more of like, there is a shopping experience that is very positive, that is not just about how do I get the thing I want as quickly as possible. It's how do I find the thing I want? I mean, off-price retail was built on this, of like this, treasure hunt, even though in theory, that should be the most annoying way to shop, right? You don't know if you have it. You're not sure you're going to end up happy. Go look, right? It's like 52 card pickup in retail. And yet we come back for it over and over again.
Right. Yeah, and just one last take, and it's kind of a hot take. Myself, I'm still hybrid, right? And going food shopping is something I'm actually more excited about than I ever have, because I want to get out of the apartment, I want to get out of the house, I want to go down and touch and feel my products. So actually, me going to the store, I've never been so excited actually to get out there and shop for my own groceries.
Yeah. But isn't that important? But that's the element of asking kind of, where is the consumer headspace at? And we're going to discuss this in a bit, but where do we think that's going to go? Like, I still am a firm believer that think about totally disconnected space, but think about coffee. Like, I love Dutch Bros. I think they're a super exciting brand to watch how they're expanding. But I am not ready to give up on this idea that sit down in-store coffee is going to be a bigger piece of the puzzle than it was in the past, because we're working in the office 2 or 3 times a week, and that other day we get sick of the 4 walls of our own home, and the idea that I can go run out, escape, get a cup of coffee, sit there, it's beneficial for me, it's beneficial for the place I'm sitting. I think it's these new win-wins that are being created, and who is attuned to them.
Yeah, maybe a place can track the hybrid workers' traffic patterns. I'd be interested in seeing that. Okay, so moving on to 2022 winners, kind of a look back, what we saw in terms of monthly traffic visits by retail sectors. And I think we actually did a head-to-head with Five Below and Dollar General. So which retailers or retail segments gained most from the 2022 selling season, traffic season?
So, I think if you were going to define 2022 with one word, it would be volatile, right? It was crazy. We started off the year with Omicron. Oh my God, things are picking up. Oh no, here's all these economic headwinds. Gas prices are through the roof. Inflation's lingering. There were so many things that you couldn't predict that just kind of threw everything on its head. And so I think the places that were able to provide a degree of expected consistency and support in that environment really succeeded. So the first place we're going to see that is areas that are providing a lot of value, right? So dollar stores, Dollar General, Five Below, Big Lots, name them, throw them in that category, they did well. Even Aldi and Lidl, and even extend that out even to the kind of QSR within the restaurant space. So people who could give you that experience while still keeping costs down were clear winners. I think another one is kind of that middle tier that was able to continue to satisfy unique needs. So think of like Target and Walmart, obviously well positioned for almost anything. But in this case, it wasn't just about the value, it was about the fact that you could accomplish so much with a single visit in a time when the visit became costly in and of itself because of high gas prices. So that capacity to kind of be there for the customer was so significant. And I would add to that the fact that though people were not in love with this during earnings season, the fact that they kept costs down, even though that impacted margins because supply chain costs were up, I think that's going to benefit them in the long term. Again, being there, being consistent, and being available to the consumer in the way the consumer needs you to be. And then I think the last group there were one that I expected and the one that surprised me. So the one I expected was fitness. Like, we thought brick and mortar fitness was going to surge back. It exceeded our expectations. But I think that power of the community, the power of the in-location experience was so significant. Shifts in clearly towards kind of more value-oriented fitness chains benefited, but that was a space we saw a lot of success from, continue to see it from. And the one that kind of surprised me a little bit more than maybe others was beauty. Look at Ulta, look at Sephora, look at how much Sephora meant to Kohl's. The power of that space in this kind of post-pandemic environment, even earlier on in the year, is so significant. That combination of wellness and beauty with beauty's comeback as we go back to work, we go back to events, I think is super significant. And it's kind of hard to bet against those brands at the moment.
Yeah, that was really interesting, Ethan. Something that we're expecting is that shoppers are going to be very value oriented and budget conscious. But on the former, value oriented can mean a lot of different things, right? You can get a lot of value, extract value from high priced items, middle priced items at Target, Walmart, fast fashion. So how are retailers going to be communicating kind of the value that shoppers are getting in a trip that they're paying a lot of money to get to, right? If you're
Yeah.
you're buying that gas and traveling. So I think how retailers think creatively about promotions, showcasing their products in the store, loyalty programs, I think is going to be extremely important looking forward. Looking backward, I think there's a lot of confounding factors in 2022 that probably impacted certain things here. But I think value-oriented shoppers is going to be very interesting to see how retailers adapt and respond to.
Yeah, 100%. I think the when you put a really important emphasis on this, it's communicating value, because different audiences perceive value for different products in different ways. And saying, here, you can get these, $5 pack of socks for $2. That is value that everyone's like, all right, great. I wasn't going to spend $30 on socks, but I don't want too much value for certain products. Like you want to have like a certain degree of, oh, this is an exciting, a little bit more expensive product. So that there is this really interesting fine line of where consumers want to save, where they are ready to splurge more, and how retailers can walk that line. I think that's the magic of like Target, for example, is they understand where we're willing to spend and where not. But I think more retailers need to figure out how to navigate very tricky tightrope, but a tightrope nonetheless.
Agreed. And just to stay on this slide for a second, because we have a question from the audience, or two questions. What are you expecting, or what are you seeing in terms of retail segment shifts in terms of tenants of malls?
Oh, all right. This is maybe my favorite thing in the world, and we are going to discuss this ad nauseum in the next slide. Let
me ask this next question first. Then, okay, 2022 winter slide. What is the difference between visitors and average visitors per venue?
Great question. Visitors looks at the overall. So if I'm Dollar General and I had 20 stores last year and 40 stores this year, visits is going to show me the addition of all of those stores. Visits per venue is going to align that number, so it helps account for store expansion. And so when you see visits up and visits per venue up, that's kind of the holy grail of, wow, things are going well. When I open up new locations, they're driving new visits as well. It's not just expansion.
Got like a comp sales number almost.
Exactly. Yeah.
Okay, great. So we can move over to the next slide. Shopping centers in 2023. So forward looking aligns with that question from the audience. And anyone who's would like to ask a question, just a reminder to drop it in the Q&A function at the bottom of the screen. So what is the biggest trend to track in 2023 for shopping centers? And then we can answer that tenant mix question.
So I think it's that, right? So if you look at malls, and this isn't something that's happening today, it's decisions that were made years ago and very intelligent strategic decisions. You look at top tier malls, they've been shifting their tenant mix. So if it was 70-80% apparel and beauty before, it's now dropping closer to that 50% mark. And then what's happening at the same time is you're increasing the amount of food and beverage, you're increasing the amount of kind of different, more off the beaten track tenants like Tesla. And you are kind of also seeing at the same time this increase in the types of tenants, or the number of tenants that want in on the mall. So think of all these digitally native brands, the Warbies, the Everlanes, the Untuckits, that are moving into retail locations. And they all want to be in these top class A major regional malls. So what happens? All of a sudden, that 20% that used to be part of that mall and is getting cut out, they need to go somewhere, right? So this shift to a more comprehensive, more diverse tenant mix is going to create intense demand for those top tier locations, but also it's going to force some of these other retailers to look for, okay, now what do we do? And I think what's interesting is it could create this really powerful waterfall effect where retailers that were struggling in these top tier malls because they're against every great apparel company that there is, fighting for that share of voice, fighting for that spotlight, are going to look down a little bit, and they're going to see these B-class malls that used to be much stronger, struggling a little bit, and they're going to say, hey, I can be the star of this show, and I can bring traffic. And the cool thing for those malls is they can start creating experiences that are different from what that regional super mall is doing, and they don't need to follow the same toolkit because there's a much wider array of tenant types. So if I fill my mall with an industrious co-working space and I have kind of that big retail, a power retailer that no longer fits in the major mall that was nearby, I can start thinking a little bit differently about what I want to fill my space with in such a way that it creates more benefit for me while that top tier still succeeds in a really powerful way. And I think this idea that this powerful change at the top for those Class A, that those top tier malls around the country could lead to beneficial opportunities down. Now, let's not go crazy. There's some malls that clearly are not going to make it and have a problematic starting point. But it is possible that for the first time in a long time, we're saying over-malled much less than we have.
That is a very interesting take. So in summary, we're seeing more D2C brands command spaces in type A malls, which is making it more competitive. And so some of the, I want to say specialty, but you didn't say specialty. Some of the retailers that may be struggling in type A to find space or drive sales may see opportunity in type B. Okay. Very interesting. We should definitely be on the look. I know for a fact, D2C brands are commanding more space. They're moving offline increasingly. We're already seeing that happening, and the price per square foot has been going up, right? So it's, I think the facts, the writing's on the wall. Now it just depends on who's going to be moving out of that type A experience. And are they going to be moving to, type B malls, or are they going to be looking at other brick and mortar opportunities? Something we'll definitely,
I think all of the above.
Yeah.
And it's going to be a case by case basis. This isn't going to be like every B mall is going to all of a sudden become amazing. But there will be those that do dominate or do create a lot more visit share than they've had in the past. And I think you're going to see that some of these retailers look for other different types of spaces as well. But I think the really interesting thing here is also, if you think about it from the perspective of that top tier mall operator, they now have more optionality than they've ever had, because there's so much demand for those locations. They're less stressed about a little bit of vacancy. They're thinking much more about, okay, how do I keep things exciting and interesting? They are able to start getting a little bit more creative and a little bit more ahead of it because there's so much demand in these spaces and there's so much exciting retail going on. I mean, you don't want to overstate it, but you consider this conversation of like, is the mall dead, which was very 2018. And now you think that there is a very reasonable path to like, actually, we could be entering this kind of like really amazing extended opportunity for malls. That is a fundamental 180. And I think it's because of some really amazing decision-making on the behalf of some of these top tier mall owners.
Right. And I think just to tie back into the retail media theme, I think the analytics and data that if you're an online brand that you can get by moving offline is increasingly appealing to a company that might be looking at their brick and mortar space as almost like a marketing flagship. Like it might not be about driving sales there. It might be about marketing and how better to understand your investment in marketing than having metrics and data behind it in terms of who's shopping, how many people are shopping, how can you engage them offline. So really interesting space. Before we move on, there's some interesting data on the screen. American Dream, there's a lot of hype around the opening of that mall to 10 plus years. Is there anything, there's a jump up year over year that could be the opening. Is there any comments in terms of performance about American Dream?
Well, I think it's just that. It's like this, we know the American Dream, or we think about it of like, oh, they have theme parks and ski slopes. But what drove the biggest peak in any one day? It was the launch of like the Mr. Beast burger place. And it was a massive peak. And so I think this idea that like these exciting new brands were entering these spaces, creating experiences and energy and urgency around concepts. A burger place is not new. This is not some like, oh my God, I can't believe someone came up with a place that you get a hamburger. This
a burger place by a gamer influencer is new.
You're right. But I mean, I think the idea that this stuff can translate and that digitally oriented brands, whether it's someone like Mr. Beast or a digitally native, apparel retailer, bringing that prowess to the world of physical and vice versa, this is where these spaces are going, and it's creating something really exciting and interesting.
It's amazing that like the power of influence, like it's obviously well spoken about, but we're starting to see online influencers launch brands, right? I mean, we've been seeing that, but whether it's energy drinks or chocolate bars or burgers, and the following is, and the loyal following of that and willing to convert, purchase, go to the store is incredible.
Yeah. Oh, it's amazing.
Um,
This is this where we tell people, Stephen, that you and I are launching a pizza place?
yes.
Is that a big announcement?
Coming to American Dream soon. So I think this is our wrap-up slide. Looking at will 2023 bring the new normal? Will we see kind of like a settle in terms of rates, probably in traffic and penetration? So will things start to settle into place following a few COVID years?
So yeah, this is like a big one that we've been trying to wrap our head around, because we look at things like the office recovery. So we have these office indexes that track, anywhere between 50 to 100 office buildings in major cities. And we try to understand how kind of that return to work is taking place. And every time we feel like, oh, well, there's this consistent, slow but steady recovery, something happens that kind of stops it where it plateaus, it takes a step back, and you just don't know. And it's so difficult to understand is this what we should expect? Or are we still seeing the unique impacts of inflation and high gas prices? Are we really back? Is this what normal looks like? And so there's these big questions, and they have massive ramifications, because if this is where the office recovery is going to get, what does that mean for the restaurants in those kind of business districts? What does it mean for expansion strategies for certain retailers where they maybe had been targeting those areas in the past, but now they need to shift their focus more to suburban orientations? And so this is a big question that we're grappling with. And the honest answer that we've come to thus far is we don't know. But and it's just the data will go so far as to tell you what's happening, but there's not a clear trajectory that is happening consistently. So when we show this to people, there are some folks who say, yeah, this is it. This is hybrid work. You're never going to see things back to where they were pre-pandemic, or even within 20 to 30% of where they were pre-pandemic. Whereas others are like, oh, no, give this time. Next year, in the middle of the year, that's when you'll see this kind of return of normalcy. And then, yes, hybrid work will be a part of the mix, but nowhere near as much as it is today. And so we are in kind of this, are we there yet? Period. Are we not? And it's going to be really interesting what we see in 23.
Completely agree. And I think that's a great summary and prediction of what to expect. I think uncertainty, but making based on what we've seen, I think things are starting to get a bit more structured, I would say, in terms of shopping patterns, sales, traffic, etc. And Ethan, before we wrap up, there's a few questions from the audience wanted to ask. Do you foresee high gas and grocery prices impacting foot traffic at malls in early 2023?
Not as much. So one of the interesting things about malls is they actually, in my mind, benefit a little bit from the high gas prices, because you can accomplish so much more in a single space. So I have to get out of the house, I'm going to go somewhere. At least with a mall, I can get a lot more done with that single visit. So think about like taking that Target mission-driven shopping concept just to that level. So I don't think will impact. Also, interestingly, outlet malls, where we were seeing maybe the biggest effect of kind of high gas prices, because you would assume in a period of more economic challenges, outlet malls would be a big value because generally they have kind of cheaper prices on high quality goods. Here, we actually saw their visits down more than other mall formats. I think part of it was just the distance. Usually these are a further kind of trip to get there. So we are seeing those visits come back. And that's giving us some confidence that we're starting to level out in terms of the way high gas prices are affecting kind of consumer decisions. Though I think inflation was still going to have a really significant role.
Got it. Makes sense. Another question. What do you think about retailers starting holiday sales so much earlier this season? We kind of touched on this already. I don't know if you had additional comment to add to that.
No, it's a really important thing to watch, because what is it? If it's really, you kind of want it to be really good, but not so great that it affects your November, December season, because you're going to have all this new stock that you also want to get rid of. So there's going to be this, I think retailers are still trying to figure out what's the new balance between this October early shopping push and what they want to do at the height of the season, let alone into December. But I think clearly this is something that's here to stay, this extended shopping season, and it provides a lot of value to a lot of consumers.
Got it. And I think it would be also interesting to see, is the consumer going to be patient, or are they going to jump on sales? Our data says that they're going to be searching much earlier. They're going to be buying in October, but that's also, there's always some survey bias in there as well.
Yeah.
Like, I'm curious, promotions are going to be starting earlier. Are shoppers going to be jumping on those promotions, or waiting for them, to get a little deeper and towards Black Friday? I think that would be interesting to watch.
100%.
And then last question here: do you think the visits to the stores and malls, this is looking backward, were down in July and August year over year due to more people taking summer vacations?
100%. I think vacations, I think the larger group sizes we saw in 21 had a big impact. I think you think 21's back to school period was a confluence of positive factors. Everyone was home, people weren't traveling, and so group sizes up, you don't have this thing to spend on going away, and retail's just reopened. So it's exciting and has this pull, and we have dollars in our pockets because the government just handed them out. So this is a really powerful group of things to give it a push. And I think part of the reason that things looked so challenging this year is because of the comparison we were making to a really good 21. That said, things still looked pretty more challenged in September, even though we were comparing to Delta variant September in 21. And even more, we're seeing pretty strong results thus far early in October, even though we're comparing to a really strong October in 21. So, I absolutely agree with that contention that the summer was affected by that tough comparison. But it's interesting that now retail is showing some real strength, even compared to some real strength the year prior.
That is interesting. And one of the questions that just came in is about debunking kind of trends from COVID.
Yeah.
And so we mentioned kind of the return to grocery shopping, and there's been a lot of talk about online grocery, the penetration of online grocery. You spoke about subscription to gyms being up. People thought, at-home workouts were here for forever. Any other trends that you'd want to call out that you're starting to see kind of go back to the norm, I would say?
So I think there's some interesting ones. So one of our favorites was mission-driven shopping. So people go to fewer stores, but they spend more time at those stores. And we saw that when you look at median visit duration, that usually gives us a really strong indication of that trend. So we saw visits going up and median visit duration declining since the start of the pandemic, when visit duration was really high and visits were lower. And we started to see that normalize. But what was really fascinating was when we looked at high gas prices, we looked at June and July, we saw that visit duration rose, even as visits were relatively weaker than they had been in the months prior. So we saw that behavior return. So some of these behaviors are really triggered by environmental considerations. So how expensive is it for me to get there? How kind of challenging is the visit? And therefore I'll spend more time in the store. Other things are, a result that are having other triggers. So think about that trading down that we're seeing now because of inflation. We saw that shift to value also early in the pandemic when people were a little bit nervous about what this could mean professionally. So I think elements that are driven solely by the pandemic are going to bounce back. Most things, though, now have other influences. So even hybrid work clearly kicked into high gear because of the pandemic. That is not going away all that fast, and it's going to have a lingering influence, if not completely, at least very strongly. So I think it's very challenging because in almost every trend we saw in the pandemic, it was essentially something being exacerbated by COVID. So the e-commerce shift, yes, e-commerce had a heightened role. That doesn't mean e-commerce is going away now. I think it's just normalizing back to the pace it was on before.
Yeah, I think that's a great note to end off. And so I think we're going to be publishing this webinar on Coresight's website and potentially Placer as well. Ethan, thank you so much for your time. It's always great to host these quarterly webinars together, and looking forward to what's in store this holiday season, and of course our 2023 Q1 recap.
Thanks so much, Stephen. Looking forward to it.
Okay, take care.